Thanks very much for joining us at another episode of Smokin' Bulls. I'm Tyler.
I'm Dave.
And today we're joined by Jim Thorne. He is the Chief Market Strategist for Wellington Altus Private Wealth here in Canada. And he's joined us here on Smokin' Bulls a number of times. So Jim, thank you very much for being here. I know it's probably a busy day for you as the Canadian budget just dropped yesterday. So your phone and your email is probably blowing up right now. And you're taking the time to sit and chat with us. So we really appreciate it.
It's okay, and I'm still recovering from the Jays losing in 7-2, so it's all right. It's okay.
Good. Yeah, we're all recovering from that. So yeah, again, thank you for being here. I'm trying to think of a way to start our conversation today. I mean, I guess budget is most top of mind. So maybe we'll dive into that a bit, and at the same time, we'll talk a bit about how your viewpoint is on markets in general as well, and investment thesis. As you just launched your November Market Insights, which of course Dave and I read thoroughly. So we'll talk a bit about that as well. So maybe let's start with the budget, Jim. What were some of the key points that you pulled out of there and that you saw yesterday?
I think the key point is that everybody hates it. Right? Everybody's upset about it. And yet, well, the one person, and I mean this with I'm talking to the folks in Alberta, the one person I'm really focused on is your premier. Right? And let's be honest, right? We need to embrace our natural resources. We have had a long period of time of an industrial policy that has not embraced our competitive advantage. The global economy has to adjust. Alberta is fed up. And, so for me, it's when I think about this is that if Danielle Smith seems to be okay with it, and of course the proof in the pudding has to be there, and the global capital markets are okay with it, then I think that's the big litmus test. So, I mean, it was interesting to see an article in the Globe and Mail today or the other day about Saudi Arabia very interested in investing in Alberta. And I know the premier was over in the Middle East. So, if the budget is such that global capital is willing to come and help us structurally adjust our economy to embrace natural resources, then I think it has achieved that goal. And at first glance, I think it has done that. But let me be honest and clear, right? I mean, there is a high level of distrust towards Ottawa, given the previous players. And so, as I keep saying, yeah, there's a lot of good things in there. It's, if you upset everybody, it probably means it's a prudent budget, but we need to see it implemented. So I give it a B, and I think it's a good first step. But to me, it would be, we're gonna have to wait for the Grey Cup where we get clarity on pipelines. And I'm waiting to see foreign capital come in. And so, yeah, I think it was a pretty good budget. It wasn't perfect, but you know what? The bar was so low because we had Trudeau and Friedland making the last couple of budgets, right? So it was a start. It was a start. I would be much more concerned if your premier was banging pots and pans and freaking out. And I just don't see that from her right now.
Yeah. Well, it's it's always interesting for us, being from Alberta, just watching how everybody else reacts to things. And obviously just, we're in a different world here somewhat. And it seems everything moves slowly compared to the way Alberta tries to move things. Everybody's opinion is, it kind of sets the tone of trying to get anything done. It's like almost, we don't want to do it because Alberta might benefit more from this than the rest of Canada. And it's kind of always been, I thought we all benefit when Alberta's doing well. It just trickles down everywhere. And it's kind of weird over here, the way we see things.
But if you think of it in terms of a corporation or anything where the fight for the status quo is always the difficult fight, right? And so let's, in that last piece, when you go back the last couple of pieces, I think we have to be honest with ourselves as Canadians, is that we haven't embraced our natural competitive advantage, for decades, since the 80s, and we should have embraced it. And what that means is an industrial policy and an economic policy that basically puts a lot of power in the West. And that upsets a lot of folks in the East. Well, there's no more kicking the can down the road, right? Trump's in, and let's be honest, we can't manufacture cars in this country. We're not competitively advantaged. In Ontario, our electricity costs are too high. How are you going to get an AI? Why would anybody, that's why I say global capital, why would any business person want to come in and sit there and go, look at how high your energy prices are, your electricity prices, where the cost of your electricity is the forcing function, is the most fundamental thing you need in this new digital world. And so you've got a lot of people in this country that are in denial, right? And so the question you have is, well, now that with President Trump in and implementing a strategy with interest payments on the US debt greater than the military spending, they have to shift and we have to shift. And so let's stop complaining about the past and let's look forward. And so if we look forward, the way we get out of this is we've got to go through a major infrastructure spend in this country. It benefits the West. And from there, what does the Bank of Canada do? Because even if we start this big spend, then even if we attract all this money to Alberta to develop the sand, I call it the tar sands. That tells you how old I am. The tar sands. And, we build the pipeline, that's 5 years. Same thing with nuclear reactors, that's 5 years. So what are we going to do? And this is where I get upset about Mr. Macklin and the Bank of Canada, but then again, I say, yeah, but because they're doing what they're doing, it makes me look smart. Look, when productivity growth is negative and an economy has is going through a major negative shock like we are, the neutral rate of interest, or R star, that is where the market is balanced, the economy is balanced, drops. So Macklin was out this week saying, we're close to being at neutral. And if I was talking to him as an economist, I would say to him, you're wrong. You know that the theory says that neutral drops. And so I think he's saying this because he's got to basically match and marry the movement of the Fed moving down. So if the Fed moves 100 basis points from here, which I think they will, I think the Bank of Canada will move 100 basis points. And that means you get interest rates close to the 1% area by the spring. How does that look in terms of real estate? And how does that look in terms of economic growth? Well, I think we'll find out. And that's, and so, we've passed the election in the United States, so the off-cycle election. It looks like our American brothers and sisters in some areas are going to embrace hardcore socialism. They're going to have buyer's remorse. As George Will once said, the best thing for capitalism is to give the socialists a time at the helm, and then we realize how bad they are. And then we go back to what's being normal. So I'm constructive. I think the budget that Carney did was as good as we could expect. I am happy that you didn't, that Premier Smith really didn't poo-poo it. I mean, she's waiting for the proof in the pudding. We're going to find out by the Grey Cup. I'm a half glass full guy right now. Because frankly, guys, the way I look at it, if you guys don't get what you want, you're going to separate. Right? That's the nuclear option. And if you separate, what does Canada have? When you really start to think about it, right?
True. Yeah, it's I think it just everything seems to move slow. Always lots of talk. I mean, we're talking about, we're investing in Canada. I mean, it feels like a slogan that we've heard for 20 years. We're investing in Canada, we're investing in Canada, we're investing in Canada. And you think, where does it all go to? Where Like I drove to Newfoundland this summer from Alberta. There was quite a bit of infrastructure going on, but it felt like Ontario, Quebec, and the Atlantic provinces. There's not a lot of infrastructure happening here other than, from the population growth, kind of trying to build better roads. But man, there was some serious things being built.
Oh, yeah, going through Montreal, right? I mean, how about let's stop building these railroad or these monorails and let's build a pipeline or a nuclear reactor or a refiner. You know what I mean? Or let's build a refiner so that we can reproduce or process rare earth minerals. Like, let's invest in the areas that are going to make the economy more efficient. And I got to watch what I say because I'm sorry, public transportation, although it's great, that's, we're joking ourselves, right? And that's the legacy of the Trudeau government. And to me, a little bit out here it's the Kathleen Wynne, Doug Ford out here in Canada, right? I mean, they can bang pots and pans all they want, but if you have the highest cost of electricity in North America, why would anybody want to manufacture here? Why? Like and we did this. Elections have consequences, and now it's there. So the way I look at it is global capital comes to Canada, like glass half full. We build the infrastructure that we need. So guys, what we have is we're going to have a CapEx cycle in the United States, and we're going to have a CapEx cycle in Canada. Invest accordingly. And I think the CapEx cycle in the United States is going to be stronger than in Canada. But if you want to buy, a company like Finning, who is a cat dealer up here, God bless you. I think it'll be fine. Yeah, you want to be in the United States and buy cat, right? Caterpillar. Okay, that's great. But we need to restructure. We are going to restructure. And I think that's what we got from the budget. I mean, the Bloc Québécois is all upset because Quebec got nothing. Yeah, good. You had 10 years of getting, you had 30 years of getting everything. Hey, Party of the Québécois, or the Bloc, let's talk about equalization payments, buddy. Right? Like, stop it. But, you gotta, in our job, what you do is you look at it, you ignore the noise. They're going to they're starting to deregulate the financial industry. It's baby steps, but it's starting. So I give it a B. And yeah, I think Alberta is going to be great. That's where the engine's going to be. I think we're going to build a pipe. To me, the quickest thing to do would be to build the Keystone, right? But look at what happened. I mean, Trump has reapproved basically the railway from northern Alberta to Alaska. Let's load that up with some cars of bitumen. Like we need to start paying for it. And so I'm very I'm constructive. I think rates come down. Quantitative tightening in the United States stops. That means the Fed has to buy 70 billion of bonds a month. That's very good for interest rates. Interest rates are coming down. Within the big beautiful bill, we know that CapEx is 100% tax deductible in the United States until Jan 1, 31. Right? We know within our budget, Prime Minister Carney has done a little bit of that as well, but true to form, not as hard or as aggressive or explicit as the Americans, right? So, the way I look at it is the United States is the place to be. But if you want to invest in Canada on a rifle shot basis, sure, there's lots of money to be made all over the place. So what I keep saying to you guys, which is Albertans, is you're going to get what you want. You got to stop. What are you going to do? You're going to stop complaining, right? The only thing you're going to be able to complain about now is that Connor McDavid, did he sign? You got him. He took a hometown discount, didn't he?
He did.
Right?
He did.
2 years.
So the only thing now you can complain about is that the Oilers don't have a goalie, right?
That's right.
Yeah. What are we going to do? But where's that leave Calgary? Their complaints.
Well, but that's the point I'm getting at. I mean, the puck's coming your way. Yeah. It's going to be very interesting to see how this evolves. We need to do it. I give you rates coming down, and if it was me, I would build the pipeline south even though we, because of the diversification is going to take forever, right? Going the other ways, you build it south and we get money coming in.
Why has
Right?
Canada never worked on just a corridor from east to west that, you know what, we don't have to go through the flow processes that we do every single time? Why don't we have a 5K wide corridor
Well,
that's
because
just,
it benefited everybody, because you benefit the families or the individuals. There are cohorts of people that benefit because of inter-provincial trade has been limited. It's all about incentives, right? Yeah. Why don't we trade east-west? We trade north-south, right? That's the trade. So that's going to change a little bit, but still, I mean, when you think about it, we, and it goes back to us not being honest with ourselves in the sense that we do not have the critical mass to basically have an auto industry, right? But we have held on to that fact. So that's Southern Ontario manufacturing. Same thing when you go to Quebec, right? You have manufacturing. You have Bombardier. You have aerospace. You have small pharmaceuticals. But you've had companies that have been benefiting. We are a branch plant economy. People benefit from not opening it up. And frankly, guys, and I mean it. I mean, if we did that and we truly, people in Canada have to understand that we've got to become more efficient and productive. And we're lazy. And people know that outside the world, right? They know that. I mean, why? For us, why are Americans wanting to invest in Wellington? Because they know we're a bunch of aggressive, we want to build a company, and very few Canadians want to do that in Canada. So I think the world is changing. We have to change. And that is, once you understand that, and that we can't go back, then you look forward and you say, look at all the opportunity. Because guys, people are going to continue to complain all the way through this. Nothing's going to change. The folks in Quebec are going to complain forever. Get used to it.
and that's, I guess I was going to lean into that a little bit. At what point do we as a country kind of realize the spot we're in? And I get, how people feel about Trump emotionally, things of that nature. Whether it was Trump or a different player, the Americans were going to have to go through their change. It just seems that we're caught up on that. We can't get past them, and it's stopping us from doing what we need to do. I mean, there's a lot of discussion, expand the trade to Europe, this, that. I get all of that, but it's very hard to replicate the trade you have with the United States when it's so close. Your transportation costs are so low, and here we are trying to go overseas to push our goods. I think it just seems to be rhetoric. It doesn't seem to make common sense that we have to just get over it, find a solution, and start producing here.
Yeah, I think, but what are we going to sell, right? Well, look at, we're not, there's overcapacity in cars. Let's just be honest, right? And with China, there's overcapacity in manufacturing. So look at, this is about resources. Are we going to me, it's get the resources, process the resources, ship the resources. That's what we need to do. And I think, look at, I would suggest to you that reading in between the lines, Carney knows that. But it's one thing for us to complain about it and one thing to know about it. And it's another thing, and you guys know this, to be able to do it in a political environment, right? So, look, the Americans have said, and this was so you go back to 1945. And John Maynard Keynes said, you need to have an explicit, automated, global trading restructuring system that eliminates or rebalances surpluses and deficits. Because what's going to happen is they're going to, America will basically implement what's called a Ricardian view, right? Open borders because for goods, because the Americans are the medium of exchange of the global economy, by definition, they have to run a trade deficit. By definition, eventually what is going to happen is that the standard of living in the United States and the level of debt in the United States is going to get to a point where the United States needs to adjust and say, no more. Okay? Typically in the past, when that's happened, we've had a world war. So this is the first time that we're trying to go through a structural and modern history, a structural adjustment process. You know, what the Americans and what all the planners at the World Trade, at Bretton Woods said, we're going to have, you know, the World Trade, or the WTO, which is a joke. Okay, that was put in place to rebalance. So look at, we knew setting up shop after World War II, we were going to have this bridge to cross. President Trump has just basically said, look, no more. We've got to onshore our critical technology. We've got to onshore our critical supply chains. And we can no longer, because of our standard of living dropping, we can no longer support mercantilist economic policies. We want to have fair economic policies. Now, everybody loses it because for 40 years or 50 years, the system has been set up the other way. Right? So we're going through this adjustment process. So what the Americans have just come up to us and said, you just got to be efficient. And if you make a good that's efficient and it's low cost, and we'll take it. Right? But we're not going to buy cars from Alliston, Ontario, just because you're Canadian. You get my drift, and everybody's shocked. Right? So we're going through a massive restructuring process globally. And on top of that, we've got AI and blockchain. And so when you start slowly reading the budget, you know, little things like, you know, they're starting to deregulate the financial system, right? They have to. Canadian banks, if they're going to be able to compete in the United States, then the Americans are going to be able to have to be able to come up here one-on-one and be able to compete. And isn't it interesting that Brookfield moved their head office from Toronto to New York City, right? So once you understand that it's about competition, and then once you understand that we can compete and that we're smart, then all we really need to do is we need to devise an economy or build an economy to attract global capital and to reward risk-taking. And then the market will take care of the rest of it. But for the last couple of decades, we based our economic theory on virtue signaling. And that can't last. And you can see that in the budget. Carney's trying to push out, you know, some of the climate change stuff. Is it perfect? No. But, you know, Rome wasn't built in a day. So the global economy has to adjust. There's no more kicking the can down the road. And we were warned about this in 1945. So everybody should stop complaining about this.
So if I'm hearing you right, and I'm looking at this from a Canadian perspective, because portfolio-wise, you know, working with you and the team at Wellington, you know, we've been pretty much overweight United States and very little in Canada, except for fixed income positions and you know, some managers that we use that have to hold a little bit of Canada. But in order for Canada to move forward, I mean, it's the reckoning is here, like you said, but it's going to take us a bit to get our structure right. The Americans need a lot of things that Canada has to offer. We're just not really offering it in the capacity they need. We need to get energy costs down, and we need to produce pretty much raw resources that they're going to gobble up because they don't have them. And that's all I hear out of all of this, and that will then produce other economies in Canada to feed that. And that's pretty much the bottom line.
Why aren't we doing what the Middle East is doing? Why aren't we just focused on becoming a resource energy superpower? And then once we're making so much money on that, then we can figure out how we want to diversify our economy. Let's keep it simple. We should be one of the wealthiest economies in the world, right? But because we embrace virtue signaling, our per capita GDP dropped. Everybody freaks when I say that, right? Productivity is negative. We did this to ourselves. No, I'm talking to folks out in Edmonton right now. You're like, as a collective, we did, and people don't realize. Like, go turn the TV in. Look what's going on to the province over there, like BC. I mean, they still don't get it,
Yeah.
right? So look, we got to change, and then the only thing I would frame to you is we are going to change. You kind of touch on it. It's going to be a little bit slower, right? In the 80s, what is so weird about a couple of things, Trump is basically wanting to build nuclear reactors. And so he contacts Westinghouse Nuclear. Okay. Do you know who owns Westinghouse Nuclear? Brookfield and Cameco, two Canadian companies. Okay. Think about that. All right. What are we doing? Right. So we have the ability. We just got to get out of our own way. And we've got to be honest with ourselves. Okay, that's all that's and if we are, and so what is Reagan doing? Like, think about this, right? Trump is implementing Reagan's economic policies, which are called supply side economics. Do you know who the father of supply side economics is? Robert Mundell. Do you know what country he's from? Canada. You get the Nobel Prize. We're smart. We just got to get out of our own way and understand that we need to create an environment for capital to come to this country, and the markets will take care of it. Carney knows this. Okay. This is, he always talks about in there's two books, Adam Smith. This isn't about socialism. This is about free markets. The first, Adam Smith was a moral philosopher. Okay. And his first book was Theory on Moral Sentiments, in which he said, let's figure out what the community wants, full stop. And then the second book was The Wealth of Nations, where it says, once we figured out what we want, let the market allocate the resources, right? We're in this transition period between, I honestly think, where folks in our country are recognizing how much damage virtue signaling has done towards climate change and our standard of living. And then once we get that, so you start to see that in the repeal, all you need to know is that the Green Party is upset about this, about the budget, right? They're upset. Okay, so you get that done. And then what we need to do is we just need to create an environment for foreign capital and the markets to work. That's why I think it's so important that we anchor off of what your premier is doing, because she's over in the Middle East, right? So everybody's saying, oh, you're not going to have any money to basically build the pipelines. Well, what if the Saudis come down and put down a solid and they finance the pipelines? Are we all going to be upset now that we have Saudi that was financing the pipeline or the expansion of Fort Mac? Are we, there's consequences, right? But that's what she's doing. She'll get the money, right? The Americans will come up. What, are you kidding me? The world has what we want, right? We just got to figure out, are we going to participate in this? Are we going to develop the assets? Are we going to get out of the way? And that really speaks to moving the industrial policy of this country away from the 401, the Montreal-Toronto corridor out west. That is what we're experiencing right now.
It's a interesting take. I like it. I mean, being from Alberta, it resonates with us. It's something we've been saying forever, but unfortunately, we've gone through what's happened and people want it left in the ground. But that truly just means you're going to live a worse life, and nobody believes that's going to happen to them. They like to, I almost feel like social media and virtue signaling kind of went up at the same time. We tell our kids to stay off of it because of the damage, and we don't even realize as adults how much it's done to us and how we want to get in front of a screen and promote that we're on top of what's happening in today's society and we're the we believe in it, and we have backers. In reality, it's been very damaging to social aspects of society and for the economy. And I don't know whether you can ever get past that the way a lot of people feel about things. So I think, not being the biggest Carney fan, I think I agree with you that he's at least put something down, like it's baby steps. Politically, you go too fast, and next thing you know, you're out of office. So you can't make a change if you're not in power. And you're going to have to start somewhere, and you're going to have to start, as they've done. They've dropped a few of the carbon issues, a few of the climate issues. You just can't repeal everything in one shot without really angering a large group of people.
And he has a minority, right? And the fear or the glass half empty was what we did in the 80s when Reagan got in, right? Joe Clark had a minority government. He lost. Reagan got in, supply side economics, and we put Pierre Elliott Trudeau in power one last time to really destroy the Canadian economy. And then by the end of the time when he left, right, everybody around the world was saying Canada was an honorary member of the emerging market. I mean, we've done this before.
Yeah.
Right? And so, so what I see is, we're not going to do what we did in the 80s. So that to me is a huge sigh of relief. It's a perfect no. If I was in Carney's shoes, you've got to imagine he's got, look, we just took over, to think of him as a general manager, right? He just took over a team with all of Trudeau's picks, right, in the cabinet, right? I mean, I think he's doing the best he can. It's baby steps. It wasn't going back to what we did in the 80s of, re-embracing Pierre Elliott Trudeau and the national energy policy and all that type of crap. Okay. So is it the step in the right direction? Yes. Could he have gone further? Yes. But, he understands that we are in a pretty good fiscal situation on the government side. He's going to fire some of the government workers. Trudeau basically hired a ton of government workers. So the government crowded out the private sector, right? That's terrible for economic productivity. He's starting to do that. But then again, what he's doing is, and this is in economics, if we take our government's balance sheet and spend it on productive infrastructure projects that increase efficiency, that's a good thing, not a bad thing. So there is a particular time when debt is good. We borrow at 2% and we invest in a pipeline, or we invest in a refinery, or we invest in ports, or we invest in critical minerals. And our rate of return is substantially higher than the interest that we're paying on the debt, and we grow our way out of it. Bad debt is transfer payments. Bad debt is building boondoggles, right? From Point Claire or Hudson, the train from Hudson all the way over the Champlain Bridge. Okay, that's a massive boondoggle. And if you look at the unemployment rate in Quebec, it's really low. Why? Because Trudeau, they're boondoggle after boondoggle in Montreal, right? So I think he gets it. I know he understands it. It's a tough golf shot. And what I'm anchoring off of is does Danielle Smith seem okay? And frankly, while all this is going down, she's over there and Alberta's opening up, economic development offices in the Middle East. Smart lady.
I agree. We're almost out of time, but if we can steal 3 minutes and maybe shift gears, let's just talk about AI. Let's talk about blockchain a bit. I know that's a big thing in your market insights. Kind of just from an investment point of view, where's the world going? We've had a few setbacks here in the last week, but where do you see things at right now?
Well, first, every time Palantir reports, and it's a very expensive stock, the couple of days after Palantir reports, the market goes down. Okay. So look, we need to get to artificial general intelligence, not AI, but artificial general intelligence. There is a feeling that that is the holy grail, and the companies that achieve that, or the country that achieves that, set themselves up for the next 100 years. We are going through the biggest infrastructure spend in arguably the history of the world. We are rewiring the world to move from what's called a CPU-centric world to a GPU-centric world. Right? CPUs, right? That's the old computers, what we're on right now, to GPUs, which is all the gaming chips that process tons of data that are the basis of AI. And so you've made it tax deductible, and we don't know what the intrinsic value is. And what do I mean by that? We don't know what the true valuation is. We don't know what the valuation of Palantir is going to be in 20 years. So we don't know if it's valued right now, right? And so once you understand that, you understand that we're in the early stages of a generational, if not historical, infrastructure build out. Whether it's the number one variable you need to be a leader in AI is cheap energy. Think about that, guys. Right? So this is a matter of national security. So we have to expect that people are going to continue to call this a bubble, and that the market is going to be expensive throughout this phase. And there's going to be times when the market has violent sell-offs because there is no valuation support. Right? And that's fair. But it's just that we're growing this business, and these big companies have cash flow that's greater than their capex. It's ramping up, and there is a supply-demand imbalance. So how long does it last? A structural bull market. Typically, you need demographics. Demographics point to the early part of next decade. You also need liquidity. And I would suggest to you that Trump has 100% tax deductibility of CapEx until Jan 1, 2031. That's in the big, beautiful bill. So you guys are running a company. Do you want to give it? You have a tax bill of $100 million. Do you want to give that to the CRA or the IRS, or do you want to spend that to ensure that your company's positioned for the future? And everybody's going to do it. So it's just basic incentives. So I think we're going to 14,000 on the S&P. This is the biggest technological wave we've experienced. We've got demographics that are there. We need energy. We've dropped the ball on cheap energy. We can be a big player in resources and AI. Invest accordingly.
Nice.
Rates are coming down. Until the punch bowl's taken away, risk on.
Nice.
Well, that's awesome, Jim. The glass is half full on the budgets. The glass feels really full on the markets. So I like your report.
Thanks for getting the memo on to wear the blue jacket and the white shirt, Jim. Appreciate it.
Yeah, you guys are matching.
There you are. There you are.
Awesome.
All right, guys. Jim, thank you very much for being here.
All right, man, be safe. Be
All right,
safe.
take
Take your
care.
time. Take care.
Bye-bye.
Bye-bye.